Good day, traders. Welcome to day two of the Collins Capital Basic Program. Yesterday, we laid the foundation by understanding what trading is, how the market moves, and what the mindset required to survive as a trader. Today, we move deeper into the market itself. Before taking entries, before indicators, before profits, a trader must first understand direction. If you cannot identify where the market is likely going, every trade becomes gambling. Today's class is focused on market structure, trends, trends, higher high and lower lows. How smart traders read price movements. So these are the four things we'll discuss today. Market structure, trends, higher highs and lower lows. How traders read price movement. It's just simply saying how do you understand what is being displayed? How do you interpret this graph on your screen? Not to worry, it's nothing big, it's so simple. Don't be afraid of anything. By the end of today, by the end of this class, you should be able to look at the chart and identify where buyers or sellers are. So, can we go in? I want everybody to be relaxed. So market structure is just the way price moves on the chart. The market does not move randomly. It moves in patterns. You understand? So basically what I'm saying about price structure is just simply when they say what is market structure? Market structure is just the way price moves. You can see this is movement. It's just how does it move? The market does not just move randomly. There are things that happens. Price creates highs, it creates lows, there are pullbacks, there are breakouts. So these things you would get to, like I would always say, don't be in a, just relax, enjoy the class. So it creates highs. This is a high. The market highs is just up, low is down. So when there is multiple high, it's called higher high. It's called highs. Just put an S. When there's multiple low, it's called lows. Just put an S to it. So it's simply it. Don't let anybody try to make you feel like you're not understanding the market. That trading is hard. It's not hard. This graph is very simple. So these movements, the highs, the lows, the breakouts. You understand? This movement tells us whether the market is bullish or bearish or ranging. So bullish is when there are when buyers are much. You say the market is bullish. That means it is going up. Bearish is simply saying the market is going down. There are more sellers than buyers. So they are suppressing the buyers. So that's when you say this market is bearish. It's just a term used in trading. Bullish is upward trend, bearish is downward trend. So now, when there's another one called ranging, ranging is just basically when the market keeps moving on a particular box, it's not going more than okay. It's just simply saying, have you seen this sign? They say, there are signs they put up in my country where they say no loitering about. So exactly. So just say the market is loitering about. It's not going anywhere specifically. It's just going up and down, up and down, up and at a particular zone. It is not breaking out. It is not going up. It's not go. It's just going. Let me show you. Let's look for what. Okay. Okay. You see, this is you can call this you can call this particular thing now. Let me get this rectangle. You can see something like this. You see, the market didn't really make progress here. Are you seeing? This box now, see, price is just inside this box. This is what we call a ranging market. So you see, the price is just busy loitering inside this. It's not going, it's just there, acting as though it's going up, going down. So at this point, this is where we say avoid the market, except you're scalping. So you see, it's just, this is called a ranging market. Let's, this is called a ranging market. It's just simple. What I said by ranging, price is just loitering about. It is not making headway. Are you okay? So now let's discuss. So as a trader, you'd have to focus on structure. What are you seeing? Remember, we said you have to have a plan and discipline and all that. And that. So there are only three things. I would always tell you there are only three things that happens in the market, which is uptrend, downtrend, or ranging. So every market exists. Now we are on to the next subtopic, the three market conditions. You can write the three market conditions. Let me explain what I just told you now in more details. The three market conditions. Every market exists in one of these three conditions. One, uptrend. Two, uptrend you can put in brackets bullish market. Bullish is Bullish. Then market, put in bracket. Uptrend, in bracket you put bullish market. Two, downtrend, in bracket you put bearish market. Then you close the bracket. Three, ranging market. These are the only three things that happens in the market. Like I've told everyone. In bracket you put sideways market. Ranging market, in bracket you put sideways, Sideways market. Close the bracket. All right, let's discuss number one, which is uptrend or bullish market. So an uptrend happens when price keeps making higher highs, HH, and higher lows. It just simply means higher highs or uptrend simply means buyers are stronger. Let me show you an example a of an uptrend. One of the examples I picked was this. Exactly. So you can see on this particular one, this is an uptrend. Let's take this guy from. You can see that this is an uptrend. This is basically what an uptrend looks like. So when we say higher highs, is that price keeps, let me extend my screenshot and show you something with a screenshot. Okay, just hold. Let's see if we can work on a screenshot. Okay, perfect. Please hold. So basically, what I'm saying in higher highs, you can see if you mark this point, this is a high, second high, third high, fourth high, and it goes on. But now you see every high is higher than the previous high. So let's call this A, B, C, and D. Higher high is HH. It's just simple. Higher highs. So you can see that when market came here, this particular height, just like a building, let's make it easy. Let's call this a building. You see, the roof of this building is higher than the roof of building B is higher than building A, and that of C is higher than building. That is just simple. That is what it is. So, because the market does not just go straight, it's much like taking a long journey. You stop by at the gas station to fuel your gas. So, that's where you see little pullbacks like this. Are you seeing? You're seeing? So, the market does not just go straight, it goes. You understand? Let's take this up. So that's what you have here. So for every uptrend, when there's a higher high, there's always a lower low. The up one is called high. The low one is called lower lows or lows. Just simple. Don't let anyone cajole you with it. It's just a name. So when you look at this, let's draw a line. So we can call this the low of capital letter A. Let's call it small letter A, and then you see B, and then you see C, and then you see D. You understand? So every low is the down one. Lower low. Low is the down one. But on this case, it's an uptrend, so it's a higher what? A higher low. What I mean by a higher low, HL, that's what it's called. Higher low. You can write it so I can clean. So basically, what I'm saying is that for this one, this low price came down to this point. The low for capital letter B, which is small letter B, is higher than the low of small letter A, and you see it. You see a progression. Are you seeing what I'm saying? Each one is higher than the previous. That is what we call lower low. So price keep pushing upward, meaning buyers are dominating this market. The market is respecting this support, first support. This is what we call support. I think in the next class we'll talk about support and resistance. I think so. I'll check the. So this is what we call support. Support is what is on the floor. Let me erase something so it doesn't get messy. So this is what we call support. You can see support. So each support is higher than the previous support. Are we understanding? So the market is respecting the previous support. So pullbacks are often buying. So when market came here, people still bought. It came here again, people entered again. It came to this other support, people were still buying. That's what it means. It's just like saying, what product should I use now? What product? Let's say oil. Let's assume oil was $1, or oil is $1 per barrel, or let's just use oil being $1. So when it's at $1, people bought. Then price went up to $1.50, and then came down a bit to $1.20. People still bought again. It went up again to $2, then came down to $1.80. People still bought again. So that's why you see pullbacks. It comes down and it goes up. Why is it coming down, sir or ma? Why is price not just going up? Because when you're seeing a buy, somebody is seeing a sell. It takes two people to make the market work. It's just like barter trading. For you to be able to buy something, it means there's somebody willing to sell that thing to you. And for you to be able to sell to somebody, it means there's somebody willing to buy from you. Simple example, price moves from 100 to 120. Then it retraces back to 110, like I just said. Then it moves back to 130. If you notice, 130 is higher than 120. 110 is higher than 100. That is just simple. That is what we call an uptrend. It means there is a continuous buyers are coming. So prices keeps making higher. There was a time like during the war, you see, price of products keeps going. Okay, when there is war, companies that sell guns or ammunitions, you see their stock going up. You see? Because there is demand. That is simple. So now let's talk about a bearish trend. So we've handled this. Now let's get this off the screen. We've handled this. Now let's talk about a bearish trend. If you don't understand, you can drop your question and I might respond. I hope to respond. Let's look for what let's look for a good bearish trend. This is gold. Gold has been, let's look for a bearish trend so I can explain. I need something that would be easier for you to understand. I like gold. That's why gold has been amazing. Should we even use GBP USD or Euro USD? This is one of my pairs that I was trading. Very amazing pair. Very. I need something that is more bold, more vocal, because I assume. Okay, let's use this particular one. Let's use this particular one. So let me draw a trend line. Don't worry, as the class progresses, you would understand how to draw a trend line. These trend lines are just rough because I'm just teaching. Okay, for a trend line, don't worry, this is rough. When we come to trend line, I'll teach you how to draw a trend line. You should touch at least 3 points, but don't allow it distract you. So a downtrend or bearish market happens when price keeps making lower low, meaning sellers are stronger, lower highs and lower low. Remember I said above is, let's screenshot this and talk about it. Okay, so if you remember, I said up is high, down is what? Is low. So for a bearish trend, it means that sellers are much. They are stronger than buyers. So they are dominating the market, meaning they are pushing price down. There are many people willing to sell than there are people willing to buy. It's just simple. So now, for a downtrend to be, it means that there is the highs are getting low, LH. That's what we call lower highs. Lower highs is simply this. You can see price came up. Let's use this point. Price came up at this point, and then this point, this point. You can see different points. Sorry, I'm marking. You can see different points. Price came. Every high here is lower than the previous high. It's just the opposite of an uptrend. So every higher is lower than the previous high, meaning price came up, touched here, this is a high, came down, created another high, something like this. So at this point, this is higher than here. This is low. This high now, which is H, is lower than this second high, than this third high, than this fourth high. That's why we call it lower highs. Let me clean. So if you watch this graph, This is what you're likely seeing. You're seeing something like this. Let's get this back. So you're seeing something like this. Price came up, down. Does it make sense? So this is a lower high. This is lower than the previous. This one is lower than this other previous. So that is what we mean by lower highs. A high is just anything above is called high, anything below is called low. But now, when the mountains up is lower than the previous one, just like we said about house A, let's use A, B, C, and let's use D. You see, house D, the roof of house D is lower than the roof of house C. The roof of house C is lower than the roof of house B, and then the same thing with house A. So that's the same thing. Then remember we said this is a low or support. This down one, you can see this down one that we called a low, it's getting lower. So that's why we call it a lower low. So for you to have a downtrend, it means there is a lower high and lower lows. Price continues moving downward in a downward trend. You can see this is going down. This is sloping downward, not upward, sloping downward. That's what we call a downtrend. So sellers are dominating. Resistance holds price. Resistance holds price down. So price came. I will talk about support and resistance probably tomorrow, probably in the next class. So there's a pullback. So a simple example: price moves from 200 to 180, retraces to 190, and then comes back to 160. You see, it goes as though it's going up again. It comes down lower than it went. Notice 160 is lower than 180. 190 is lower than 200. Are we understanding? It just simply say in a lower trend, the roof of the previous one is higher. Are you understand what I mean? Yes. So if has A, the roof of has A is higher than the roof of has B, and then the roof of has B is higher than the roof of has C, which is down to have, you understand, has D. But if it was an uptrend, or just know uptrend is the downtrend is the opposite of uptrend. Simple. Whatever you know about uptrend, like I explained, the opposite is what we call a downtrend. So now let's talk about ranging market. Now let's get off this and let's talk about a ranging market. I was using gold for to cite an example. I think I exactly. So a ranging market, in brackets, which we say sideways market. A ranging market happens when price moves sideways. No clear higher highs, no clear lower lows. You can see there's no clear thing here. No clear higher highs, no clear lower lows. The market keep bouncing between support and resistance. This is what we call support. Let's screenshot this. So I'll show you. We already know what anything under is called support. Resistance is up. So resistance, support, like we know what support is this is you. support. Support, like we know, is ground, floor. Resistance is up. It's just like saying the ground is supporting you while the roof is resisting you from jumping up. So that's what he's saying. So a ranging market happens when price moves sideways. No clear higher highs, no clear lower lows. The market keeps bouncing between up and down. So you're going between your roof and the floor, roof and the floor, roof and the floor. You're not really making any headway. This is where many beginner traders lose money because they force the trade. This is where people lose. People lost, not people with people lost money here because there's no clear direction. You enter for a sell here, it came down. You think it will break out. It came up again. Oh yeah, you're expecting a buy. Let it came down again. So you see, there's no. It's just moving inside this box. So if you trade this kind of market, that's why we say avoid this kind of market. Professional traders understand that no trend equals to less opportunity. If you're not seeing any trend, it's not going up, it's not going down, it's ranging, just avoid the market. There's no clear direction. Sometimes the best thing to do is not to trade. There are some days you can see this is more than 24. This might be for some days. It might be 2 days, it might be one full day. So when you see something like this, it is advised that you just avoid trading for that day. Are we understanding? So it's simple. What I said, ranging market is more like price is not making headway, no clear direction. The market keep bouncing between support and resistance, which I used the floor and your ceiling. The floor is supporting you, the ceiling is resisting you. So price keeps going from the floor to the ceiling, back again to the floor, back again to the ceiling. So that's what we call a ranging market, and it is advised that you avoid such markets. So now let's go into understanding higher highs and higher lows. This is one of the most important concepts in trading. Higher highs, which is HH, means price breaks above the previous high. It's just simple. If you understand this, so this was a high. So this was a high. So price came up, it broke this. Let me do something. So if we are to draw a graph, you can see price broke this and went up, right? A higher high just means that price breaks the previous high. This shows strength from buyers. It shows that people buying are much. Higher low means that price retraces but does not fall below the previous low. So price retraces. This is higher low. Price came down, but it did not fall below this. Look at this low. Now if you are to draw a line, it did not fall, it did not go down more than this one. You can see it's the same thing with these ones. It's are we making, do you understand what I'm trying to say? Do you get me? This shows buyers are defending the market. When you consistently see higher highs, I think you would have to watch this again to understand. When you continuously see higher highs and higher lows, it means the market is bullish. The opposite is the same thing for lower low, for a downtrend. When you continuously see the opposite of these higher highs, opposite of higher highs is lower highs. Opposite of higher low is lower low. So when price keeps breaking the previous support and going down, making further down, it means it's a low. So that's just simple. Now, why most beginners lose? Many beginners buy in downtrend. So when beginners, some beginners see this thing, this is an upward trend. You see some people, instead of buying, they are selling. You should be looking for opportunities to buy in this kind of market. But because they do not understand, they will be selling. Like I say, you buy if you are buying in a downtrend, you're losing. Remember downtrend. And if you're selling in an uptrend, you're losing. So ignoring structure, if you ignore structures like this, or somebody would see somebody would see the market going up. But because right now, currently, so I want to screenshot. Is then okay. When you enter emotional, I think I've discussed emotional trading in the first class, so I don't need to explain it further. But you can ask questions, just put on the comment section. I would answer you later if I can. I would answer. So, a trader must stop fighting. Don't fight the market. There's something we call holding a falling knife. You don't go trying to catch a falling knife. You don't fight the market. The market does not care about your emotions. So you see traders place a trade and they are praying, God, please let my trade go. The market does not care about that. Your job is not to predict the market. Your job is to follow confirmations. You see something, you follow where is the market going. Follow the direction of the market. Don't go around try to fight the market. Let's talk about the importance of patience since we are talking about it. One mistake traders make is entering too early. The market rewards patience. Sometimes you know this is an uptrend. Let's screenshot this guy. You know this is an uptrend. You've checked it out. You've seen this is an uptrend, right? Sorry, sorry, this is not. Okay, let me see if I can draw. You've seen that this is an uptrend, but instead of waiting, you're no longer patient. You see market just drop a bit here. Allow it to get and then you look for confirmation. Some people are too emotional. So at this point, they just jump into the market. You see, the market pulled back a bit, they would have lost because they didn't wait for a confirmation. They didn't wait to show that, okay, buyers are back in. So sometimes you're in the market and then let's use oil. Let's see use oil. So you can see that the first time you came into the market, you saw that there are many people with oil. There are many people with oil. Let's talk about a sell trend. I want it to be simple. I'm trying to break the class so simple because this is basic. When I'm handling the advanced people, I know how to handle them. So instead of waiting to confirm that, oh, people, okay, you come into the market, you're with oil, and then people that wants to buy oil, they are much. At first, you sold the ones you have at a high price. Then the people that had bought batch A, they've gone. You went home to bring another set of oil. Instead of waiting for the truck that are bringing these customers to come, wait for it to come and offload them so they can come and buy. You quickly sell to those people at you're quickly. So the people, now there are much people selling, so price has dropped. So wait for there to be the demand so you can bring in your products. So that's what happens. You don't wait to see the buying demand before showing your product. So smarter traders wait for confirmation, structure, clear direction. Do not rush because of fear. Some people, there's what we call fear of missing out. So you are afraid, I don't want to miss out. Price would go and leave me behind. No, you wait. So simple rule for beginner: if the market is making higher high and lower lows, look for buy. So when you see something like this, look for a buy. If you see a lower, when the market is making lower highs and lower lows, look for sell. When the market is going sideways, remember I said sideways is what a ranging market. When the market is going sideways, just stay patient or leave the market. Keep it simple. Complexity destroy meaning. What I'm saying now, don't try to complicate it in your head. You see the examples I use, houses, whatever, just take it simply. Ask questions, don't try to complicate, forget about the graph. Like I would always tell you, don't be in a hurry. We'll discuss about the graph extensively. You will be able to interpret it. This is just basic. Forget about those red, green, whatever, forget about it. We'll talk about those ones. So, one assignment I will do for you, your assignment for this particular class is open at least three charts. Oh, I don't know if I should make a video on how to use MT5 or MT4. I'll show you that. Okay. When I show you that, then we'll now. So what you will do for this particular class is open at least three charts. Identify whether the market is bullish, bearish, or ranging. Then the first assignment is what? Open at least three charts. This is what, these are the different charts. You just do chart. You open, just open much, and then you identify. The second assignment is identify whether the market is bullish, bearish, or it's ranging. Number three is mark the higher highs, the higher lows, the lower lows, lower highs. Take screenshots and then send the analysis to the group. This class is becoming too long, so today's lesson may look simple, but this is one of the strongest foundation in trading. Indicators can fail, signals can fail, strategies can fail, but price itself always leave clues. Price will always show you things. The, if you learn how to read structure, you would have a major advantage over others in the trading market. Master this slow. You see this particular thing I showed you? Master it slowly. Don't be in a rush. All right, everyone. Thank you for your time. I'll see you in the next class. If you have any question, like I'd always say, do not be afraid to share. Don't be afraid to ask your questions out. I'll answer when I can. All right. Thank you, everybody. Bye.